Hi everybody, this is Dan at Theta Trend. Today is Monday, November 18th, and it's about a quarter after 5 here, so 3 or so hours after the market close. I guess 3 1/4 hours if you want to be exact. Um, in this video, what we're going to do is talk about a short strangle that I sold on the SPY. We're looking at the SPY right now. But before I get into that, I just wanted to say, if you're new to Theta Trend, welcome. I'm glad that you're here. And at Theta Trend, what I'm focused on is helping you implement trend following systems using both ETFs and options. And really, I like to do that regardless of the account size you're trading, whether it's big or small, because I think there are some great ways that you can apply trend following principles even with a small account. But that's sort of my 2-second pitch. So let's get into this. Right now, we're looking at a chart of the SPY. And this is a year-to-date chart, just so everybody knows. And as you probably know as well, stocks have been up big time on the year. And the reason I sold this strangle, and let's go over here and take a look at a strangle just in case anyone isn't quite sure. This is the risk graph of the strangle, so it's basically a short put and a short call. So very similar to an iron condor, except that it has no cap on the risk. But the reason I sold this is sort of part of the trend following portfolio that I was talking about on the blog. And what I wanted to do is to have some sort of a non-directional options component in it. And originally I was looking around and I was trying to get filled on an iron condor in the RUT. And this was last week, let's say 66, 65 days till the January expiration. And I just couldn't get a good fill price, basically. And so I stepped back and I said, what am I going to do? I don't really want to sell a trade at a price I don't want. So I moved over to the SPY, and what I ended up doing was just selling the short strangle. It gives us a non-directional trade. We just need to be more careful about managing the risk because there's theoretically unlimited risk on the upside, and on the downside, it's limited by the price of the SPY going to the zero, which would be fairly bad if you ever let it get that far. But at any rate, there's no cap on the risk like with an iron condor. So what I'm looking at here is I sold this strangle for 96 cents or $96. And my target on that is about 58% of the credit, which equates to $56 or so. Just say roughly 60% of the credit should be your target is what I'm usually looking at. And that's also going to be equal to the max loss I'm willing to take on the trade. So what I also know is that if the max loss I'm willing to take on the trade is $56, what I'd like to do is sort of adjust when I'm getting to, somewhere in the neighborhood of a third of the way to my maximum loss. For purposes of this, I'm just calling that $20. So what we have here is right now my cursor is on the live price in the SPY. It's about 179.45. And this white line is the profit and loss line today. Actually, that's tomorrow. Let's move it back to today. I don't want to get carried away here. So today we have an open profit on the trade of about $7 with price here at 179.45. And my adjustment point on the upside is around 182.40, and that's when I'm drawing down $20 there. And on the downside, it's at 174.53. And over time, this white line is going to tick up, and those adjustment points are going to move out. But for right now, if this was to, if price was immediately to go to here, that's where I'd be looking to adjust. And my initial adjustment on this would be just to roll one side of it. So if I started running up here to 182.40 or so, I'd be rolling out my 188 call a little bit higher. And I would roll higher as opposed to further out in expiration because we're already out at about 60 days, and I don't necessarily want to be out 90 days at this point. But let's just take a look at these two numbers on the chart there. So 147 or 174.53 and 182.40. So you could basically call it 174.5 and 182.5. We'll jump back over here to the SPY. So on the downside, I'm looking at making an adjustment if price trades down, basically to these lows right here, the lows of 11.7 and 11.8. Then I'm going to be looking to roll down the put And on the upside, it's a little bit closer here. It would be right in there, basically. And so from 179.42, if we got up to about 182.5, that's when I'd be looking to roll the call up. But for now, we're just going to let it go and let it sit. Price is a little bit extended in here. I don't know what's going to happen. I never predict price, but I mean, we are in a primary uptrend, so as long as that's the case, the case is probably that price is going to tend to go higher, or at least not fall back down. But you can get periods like this where you have price does fall down, but in this case, the direction was resolved in the direction of the primary trend, which is higher. So we'll see what happens over the next couple of weeks, but that's the target on that. To buy it back for a 40-cent debit, which gives us a $56 gain. Hop over to the blog at www.thetatrend.com and check it out. Thanks.